And rumors are flying that their day may have come and gone. Joining me now with the impact of these rumors on today's markets is CNBC's Mary Thompson. Mary, is history repeating itself?
It could be, rumors specifically about one hedge fund having come and gone. That's what was in the markets today, and the news had opposite effects on the stock and bond markets. All day higher oil prices and talk a hedge fund may go under pressured equities. They failed to turn things around even after London-based GLG, the name of the hedge fund being bandied about, denied it's in trouble. AG Edwards equity strategy.
You know what? In the good times, we don't hear rumors of hedge funds going down. When there's plenty of liquidity in the system, we don't hear rumors of hedge funds going down and corporate paper being devalued. We only hear that when times are turning and churning, and I always wonder, where there's smoke, there's fire. We will see. Still to come on Kudlow and... It was Mark Twain who once said, "The reports of my death have been greatly exaggerated." Could hedge funds be saying exactly the same thing? Is it true? Joining me now with more on the potential demise of hedgies, Gregory Zuckerman, reporter for the Wall Street Journal and co-author of today's front page article, which set the rumor mill in motion. Did it ever? And Charles Gradante, managing principal at the Hennessee Group, which advises hedge fund investors. Mr. Gradante has testified in front of the House, the Senate, and the SEC on the topic of hedge funds. Greg Zuckerman, welcome back. Listen, old buddy, to me, this hedge fund story in the market was big news and it was bad news. All right, a day after you wrote this thing, or let's say a market day after you wrote this thing, what have you learned? What do you know now that you might not have known this morning or last night when you filed it?
Well, we don't want to scoop ourselves. We have a paper coming out tomorrow that we want people to pick up. Their problems are continuing in the hedge fund world, as we suggested today. I guess it's twofold. You got underperformance, hedge funds across the board, big names, famous names, guys who haven't had down months are all down this year. Not terribly so. They're still outperforming the overall market.
Which big names, Greg? You got a name or two for us?
Caxton's a big one. Bruce Kovner's a major name in the hedge fund world, the multi-billion-dollar hedge funds. These guys outperform month in, month out. They're down over 2% just in April.
Kovner's a brilliant guy. I mean, he's had a great long-term record, hasn't he?
Yep. Citadel's another one in Chicago. Again, unbelievable long-term records. And all of a sudden, these guys are having challenges. Now, again, they're still outperforming the overall stock market, and you don't want to go overboard here. But if those guys are having some issues, you wonder about who may be having even more problems. That's the concern.
Charles Gradante, let me just ask you, see if you heard some names today. QVT was on the sort of the hot seat. They deny any problems. In fact, I want to be fair. This fund, I believe it's a Boston hedge fund. They say they're up 2.6% year to date through April, and they're already up slightly in May. The other name that jumped out like a sore thumb was Deutsche Bank. It is alleged, now this is just market rumors, that they are the prime broker of a hedge fund that's in a heap of trouble. The Deutsche Bank stock fell 2.9%. They made no comment. Sir, do you know any information? Have you heard the same rumors that I've heard?
I've heard the same rumors, and I'm glad you brought up Deutsche Bank. A lot of credit risk is on the banking side, whether it's Deutsche Bank or JP Morgan, Citibank. So the banking community is participating in hedging their balance sheet and creating a lot of trades that look like hedge fund related trades.
What kind of risk, Charles? This is very interesting.
For example,
they're making loans to hedge funds who are then levering into highly risk assets? Is that what you're saying?
That's one thing, but what about credit default swaps? In many cases, the banks have sold or let credit default swaps to hedge funds who are hedging their bond exposure, their credit exposure, and the bank is not holding the bond. So they're short the credit default swap. As the GM event risk caused many commercial banks and investment banks to start hedging their counterparty risk and their market risk in the credit by shorting the bond or the underlying equity.
Greg Zuckerman, come back to you. You're listening to Charles talk about these credit risks. It's very important. Now, I am told by sources today that some hedge funds levered heavily into something called second liens, which are really crummy pieces of paper. Not even banks would buy them. But now, with credit somewhat suspect, with a little whiff of deflation in the high-yield junk bond market and so forth, this second lien stuff on top of convertibles, which have virtually no credit standing, this is a problem. What do you hear on that?
Well, the bigger problem is that which they own, but also about how they're hedging it. As we remember with LTCM, it wasn't just what they were owning, but they were hedging. Back in LTCM, long-term capital, they were hedging by selling treasuries, and then it went the other way on them. Similarly here, sometimes they're buying stuff that in the debt world that's a little risky, and sometimes they're protecting themselves, hedging themselves by shorting underlying shares, and sometimes that's not working. For example, GM, where the shares actually went up and the debt went down, and that's happening in different places, converts and credit default swaps. So that's where you want to be careful of. And you talked about leverage earlier. I think leverage is a big issue. Leverage has come way down since '98 when LTCM had all that leverage, but you want to be careful about how some of the Wall Street banks have been loaning to investors in hedge funds.
So this is a hedge fund problem potentially, but it is also a banking problem potentially. That's what I'm hearing from you guys.
That's right. And another point to bring out is Greenspan has always pointed to hedge funds.
Yeah, some people think, Charles, that he is using that as a policy target for his tightenings.
Well, and also the point that hedge funds provide liquidity where the commercial banks have pulled back as they consolidate. So that junk bond you were talking about that hedge funds are purchasing, or the mezzanine financing.
Yeah, it's the mezzanine stuff that really concerns me.
There are a lot of hedge funds that are long mezzanine financing, and they're short the collateralized debt or the secured debt of the corporation as a hedge, and they were actually playing a Goldilocks economy. Now that things are being shaken up a bit, it's coming home to roost. But without hedge funds, who would buy the mezzanine financing?
Well, okay, but Charles, let me ask you this. I mean, to defend hedge funds for a minute, I mean, they're out there, they're not going away, they're a legitimate investment vehicle, for heaven's sakes. Most of them, in my experience, are highly disciplined, and in fact, the long and short concept is itself a risk-averse concept, is it not? And it says to its investors, we're not necessarily going for home runs, that we want to take a more balanced, risk-averse position to give you somewhat lower, but more palatable, more predictable returns.
As a matter of fact, that's the way the smart money on Wall Street has always been managed. You came from Wall Street, I came from Wall Street. Proprietary trading is really where long short was invented back in the turn of the century. Lehman Brothers and Goldman Sachs were doing it back in 1920. That's how they manage smart money.
I agree. And Greg Zuckerman, I mean, there's no question, as your article noted today, it's become a very competitive field. You got a lot of hedges in there. There's a lot of money, $1 trillion, and things really, so it's gotten tougher. Competition means your margins are going to shrink. But in your reportorial inquiries, you're not finding any evidence that hedge funds are going away.
Are they going away? No, not necessarily, not at all. I mean, they still outperform mutual funds. I mean, the whole concept of hedge funds is to create absolute return rather than relative return. The whole idea that mutual funds are doing well for their customers because they're down 10% and the S&P 500 is down 12% has not borne out in the last bear market. Investors are very disappointed, and they continue to shift to hedge funds who say, we're going to try to give you outperformance in any kind of market. The question is, as hedge funds keep getting larger, and if they run into some outperformance, what kind of impacts they'll have on the market as they try to dig out of these problems.
Well, and Charles, your data from the Hennessee indexes does show, I'm looking at this, for example, short biased index. Right. They're up big this year, 17.5%. Right. You made money in the Latin American index. Right. You made some money in the event-driven index, in the Europe index. I mean, some people are making money out there.
Some people are making money, but the notion that hedge fund or the money flowing into the hedge fund industry is causing poor performance is misleading. The lackluster performance is a function of the tight trading range that we're experiencing in the equity markets, the flattening of the yield curve. I mean, hedge fund bond traders, just like the proprietary traders on Wall Street, are having the same problems. You get a flat yield curve.
Yeah.
The carry trade is gone.
I agree.
Volatility traders, the volatility, the VIX is down to 13%.
All right, we got to close it down. Charles Gradante, thank you very much. Greg Zuckerman, I appreciate it. I think everything you guys, I don't want the Fed to keep tightening. I think that's one little piece of this. But thank you, gentlemen. Appreciate it. All right, kids, next up, we've got an important interview with Senator John Kyle. His view on President Bush's message diplomacy, sharp message diplomacy, freedom, democracy. Those are watchwords on Kudlow and Company. Please.